Hello everyone. Today I want to share my take on the current situation of the markets and my key learnings and insights from today's market action. So without further ado, let's jump on right into the analysis. Starting with the weekly time frame. So in the weekly time frame, I wanted to discuss these two important things. Today is the first day wherein we actually breached the 0.618 level and we head lower. So remember the range I talked about? So let's go into the charts and see. So over here, you can see that this was the range of the lower bound, that is 0.618 ratio of the Fibonacci series. And then we actually broke down today with a conclusive volume. So this is one important observation. And the second important observation is now the next support on the weekly time frame is 50-day moving average. And that is the defending line for the bulls. 50-day moving average has to hold in order for us to sustain and survive in a bull market. So now let's jump on to the daily time frame analysis. And the two important things that I observed on the daily time frame is we broke conclusively the 200-day moving average. And we also have now the next support zone, that is S2 on the pivot levels. So let's jump on to the chart and I can show you. So over here, you can see that yesterday we conclusively broke 150-day moving average. And I told in the yesterday's video that the next support is going to be this pink line, that is 200-day moving average. But today we actually broke down the 200-day moving average as well with higher volumes. So obviously the next level of support is going to be S2 on the pivot level, and that is 13,920. So let's go to the intraday time frame and let's have a detailed analysis on what happened intraday. So today I wanted to discuss two important things, the S2 level and the correlation with the wicks. So let's move into the charts. So this is the 5-minute charts that we follow in the intraday. So over here, you can see that when we started the trading session, right, we actually chopped in for just 20 to 30 minutes, and then we actually broke down. And as you can see over here, normally what I use is 5-day and 26-day EMA, and I try to locate the crossovers. So we got a crossover on 650. We got the confirmation on 6:55 Pacific time. So I was thinking that, okay, this is 6:55. We have a news data release at 7 o'clock. So I should wait. So I waited, and that was the best decision I made because the S1 level, that was the support, broke out. So we knew that today we have a sell signal over here, and then I just waited patiently. So over here, after 7:45, it was looking as if it was going to go higher, but we never got the confirmation from the crossover of the moving averages over here. So over here, since we did not get a successful crossover, that is the bullish crossover of the short-term moving average to the long-term moving average, that is 5 and 26, I was confirmed that today is a short day because people are shorting and there is no clear sign of strong buying power, and there is, most importantly, there is no confirmation. So what I did is I was waiting for this level to get breached. So the moment S2 got breached, I went short, and then I was just waiting, like how much can it go down. Now according to the pivot levels, till S2 was the obvious support. But if you go to the daily chart, you can see over here that 200-day moving average was sitting at almost around 270. So I waited till 270 to breached, and I saw that it is consolidating. It breached 270, but then it was consolidating. So I still waited and see if I can get to S2 and then cut my position. So sure enough, it went to S2 and I cut my position. The intraday value has already been redeemed. Now the question was, can S2 hold itself? So looking at the daily time frame, it was really down. So almost like 2%. So what I did was I just waited for the S to confirm. Once it was chopping around like 50 points, and then once it got confirmed, there was a value going into long. But as you can see, there was a lot of resistance overhead, like 50-day VWAP. Everything was about the price action. Stop trading today, and then I was just waiting for the earnings to happen. So these are my learnings from the intraday and my insights. So as you know, we are going into the earnings season, and a lot of big companies have already reported, and today Amazon also reported. So we are supposed to actually examine like what are their earnings and what's the impact of their earnings. So I wanted to share a detailed analysis of earnings as well. So as you can see over here, Microsoft, Google, Meta, everybody is beating on the estimates. So if you want to check like overall a very fastest way and a quick tip to how the earnings was, so let me show that in the trading view. So this is the trading view, right? If you select any company, let's say Microsoft, right? And if you look at their quarter on quarter earnings, that is this one, you hover the mouse over there and you'll be able to see that they beat the estimates by 12%. If you same goes to Meta, if you go to Meta's earnings, and you can see over here they beat the estimates by 20%. If you go to Google, the same their earnings, they beat the estimate by 6%. So already the big tech is coming out and blowing out in quarter on quarter earnings. So here's my important take. If the big tech companies are holding up as far as earnings are concerned, and if we have a Fed which is very likely to pause, then what in the world would bring markets down? So let me show you a very important Fed Watch tool. So as you can see over here, this is the Fed Watch tool from the CME, and the CME data suggests that there is a 99.4% chances that the Fed is going to keep the rate, the terminal rate at 525 to 550, that is 5.25% to 5.5%. So here's the thing, if the Fed is not, increasing the rates, if it is thinking of pausing, if the big tech earnings are, keeping up with the earnings, they are blowing out the estimates from quarter to quarter, then what on earth will bring the stock market down and, create a havoc? So my thesis is this is a very good dip, and this dip has to be bought. So for all the swing traders out there, we are already, and one important point over here is we are already down by 15% from all-time high, and we are down by 11% from the recent highs. So when you get such pullbacks, when you get such corrections, normally historically these are the golden times to buy. So for all those swing traders out there, there's a very good chance that we will held a Christmas rally, and probably this is a very good time to invest in QQQ. So finally, I want to thank you all for viewing the video, and if possible, please like, share and subscribe. I hope that I am bringing a lot of analysis which adds value to your trading or investing journey. So I will keep on doing that, and until next time, peace.